Welcome back to Explain the Charts. Today is January 7th, 2025, and we're diving deep into Intel Corporation, INTC, stock. Recent news indicates that Intel experienced a significant price drop on Monday, January 6th, closing down 3.36%. Several news outlets attributed this decline to various factors, such as concerns about the company's future prospects and the overall market sentiment. Let's analyze the charts to understand the technical aspects and potential correlations with this news. Looking at the daily chart, we can observe the recent price action. The drop on January 6th is clearly visible, marking a significant swing from the highs of the previous weeks. We can also analyze the volume traded, confirming high trading activity surrounding the price drop. However, simply examining the most recent price movements may not paint the full picture. It's important to take a step back and investigate longer-term trends. Let's zoom in on the past month of data on the daily chart. This period reveals a series of ups and downs, but a general downward trend is apparent. This confirms the prevailing bearish sentiment. We see a key resistance level around $45, which has been repeatedly tested and rejected. This indicates that $45 is a crucial level that could cap any price increases. Now, let's switch to the 1-hour chart to get a finer-grained perspective of price fluctuations. This provides more details on intraday momentum, identifying support and resistance levels within the day's trading range. A closer examination may reveal shorter-term patterns that are not evident on the daily chart. Looking at the 1-hour chart reveals smaller price swings compared to the daily chart, highlighting intraday fluctuations. Identifying support and resistance levels within the day's trading is useful, especially in short-term trading. The volume helps understand trading activity during these price fluctuations and helps determine the strength of the moves. To pinpoint the exact moment of the drop, let's focus on the 15-minute chart from 17 o'clock Universal Time coordinated on January 6th. This allows us to assess how the market reacted intraday during the price decline. Examining the candles will expose the precise details of the price drop and the volume traded during this period. Analyzing the 15-minute chart gives us a clear picture of the swiftness and intensity of the price drop on January 6th. Volume analysis supports the bearish sentiment, suggesting a considerable number of sellers were involved in pushing the price down. Overall, it appears that the market was relatively liquid during the drop. Returning to the daily chart and looking at a broader view, we can examine whether there are any broader patterns that could correlate to the news and provide a longer-term perspective. Here we look for trends that extend beyond the recent price movements. In summary, INTC's recent drop aligns with the bearish sentiment seen in the news. Key support and resistance levels observed are $19 and $22 respectively in the short term and $45 in the long term. A sustained break above $22 may signal a short-term bullish reversal. Conversely, a break below $19 could accelerate further declines in the short term. In the long term, a decisive break above $45 would suggest a change in market sentiment. The likelihood of these scenarios depends heavily on future news and investor sentiment. Positive earnings reports or positive news about technological advancements could boost the price. Conversely, negative news or further disappointing financial performance could lead to a continued downward trend. Keep an eye on volume and price action at the identified support and resistance levels for confirmation of any predictions.